Welcome to today's webinar, compiled and produced by the team at biznews.com. All of our webinars are interactive. We encourage you to pose questions to our guests. The more challenging, the better. And the earlier you get the questions in, the better the chance of having them answered. The recording of this webinar will be available later today on the biznews.com channel on YouTube. Yeah, well, there you are. We've got our introduction or reintroduction to 12J webinar today. We've got a full house of guests, so it's going to be quite a lot of fun in being able to corral them or coordinate them. But as always, Stuart Lohman, our general manager here at BizNews, is with me. Stu, do you want to take us through the technicals?
Excellent, thanks, Alec, and welcome to all. Just quickly, if you can see Alec on screen, and there's a nice presentation introduction underneath him on the same screen, and hear my voice. Can you give us a high five? There's a high five button on the control panel on the right-hand side. See a few high fives coming through. That's always good to see. Can you let us know if it is a bit soft, but generally the sound is okay, but just let us know. Alec also likes to keep it quite conversational in terms of the questions. Those new to the webinars, there is a questions button on the control panel. If you put your questions in there, Alec can pop them on to one of the 4 guests, which should be quite exciting. Alec, thanks very much.
Brilliant. And the little question mark on your control panel, very easy to find. It comes through as text here to me, and I will then pose it to our guests who will be introduced in a little while. I thought to start off with, what I'd like to do is just to take you through very, very briefly what 12J is all about. Now, we've had experience with this. The BizNews community will be aware over the last 2 years, we partnered with Bright Light Solar and did a lot of engagement with Kevin Shames, the CEO there, on 12J and what it meant. But it's nice to have a refresher, and that's really what the purpose of this webinar is. So let's just, by the way, Bright Light Solar is not raising money in this tax year. They are not participating, but you will find today, you'll meet today, the partners that we are 12J partners for the next tax year, and you'll be learning a lot more about them and their companies in the weeks ahead. We'll be focusing much more on that, but in the short term, just for today, the idea is to have a introduction which you can then understand a little better what this is all about. Right, the why. There's Thabo Mbeki. It was his great idea, and unfortunately he was not there to shepherd it through, because you might recall in 2009 he was replaced as president of the country. But part of his economic thinking was try and incentivize people to invest money into the right kind of things that will stimulate jobs and grow the economy. And that was where this tax incentive came from, what we now know as the 12J. It was Section 12J of the Income Tax Act, and that's where the incentive began. The second part of the 12J story is the what. It's all about income tax, the full investment that you make into a 12J company, and there's a lot of hoops that they have to go through to become accredited as 12J companies, can be written off against income tax in the year in which it's made. So if you make the investment now until the 30th of June, when this all ends, you can write it off against your taxable income for the tax year to the end of February next year. Over the period, a total of nearly 16 billion rand has been invested into qualifying companies, so it's been pretty strongly utilized. Interestingly enough, utilized primarily by high income earners. The how, the money goes into a 12J qualifying company. It has to go before the 30th of June, as I mentioned earlier. That is when this ends. So this is the last chance that you can take advantage, or South African taxpayers can take advantage of this tax incentive. And the who, well, I had a look back at the budget 2021 review this morning, and of the 1.8 billion rand that was injected in the last 5 years, 1.7 billion rand was for people in the top marginal bracket, i.e. people earning over 125,000 Rand per month. So if you're in that area, if you have taxable income of more than 1.5 million Rand a year, this is for you. The smart guys have been taking opportunity of this because in effect, the tax man pays 45% of the investment. And the end, there it is. I want to read this because it's quite clear that it's a wonderful opportunity for high income earners, but it's not going to be there for long. This is what Treasury said in the budget review. The 12J incentive provided a significant tax deduction to wealthy taxpayers. The majority of the investments supported by the incentive seem to be in low risk or guaranteed return ventures that would have attracted funding without the incentive. That's the way they see it. In essence, what it's telling us is that these are investments that would stand on their own anyway, but because of 12J that ends at the end of June this year, you're also getting a tax benefit from it. So that's by way of background. I'm going to introduce our panelists today. First off, Gidon Novick, as you can see on the screen there, his 12J company is called Lucid Ventures. Gidon, if you'd like to just stick your camera on, and I will unmute you, and we should be able to see each other. What brought you into the whole 12, well, maybe put it differently, when did you start getting involved in 12J?
How's it, Alec, and everybody else? It was about 6 years ago. 12J had actually been going for a while. It had started quite a few years before, but it was just starting to get a little bit of attention. I had a personal tax bill to pay, and I thought, geez, what a nice way to get around it, to start a 12J company. Had no idea what we were actually going to do with the 12J company, raise some capital from family and friends, and then evolved into various underlying investments, mostly into the hotel sector, and we'll talk a little bit later, I'm sure, about our latest iteration in the senior living space.
So you put your own money in first. It was an opportunity that you saw for yourself.
Yeah, I mean, it was, and you know, also friends and family, similar, you know, opportunity to, you know, make an investment in the country, save the tax, and as we'll discuss, I'm sure, you know, the underlying investment is really key to it. There's many 12J options available. And so it took us a few years to find our niche, but we certainly did in the hospitality space. And yeah, it's been a very interesting ride.
Let's pick up with the second of our guests today, Hugo Fenter. Hugo, if you can switch your camera on. Okay, there you are.
Hey, Alec.
Nice to see you. Also coming to us from Cape Town.
That's right.
Okay, and your company, 12 Cape, when did that begin? When did you guys discover 12J? It's been around since 2009, but it's almost like most people found out about it fairly recently.
Yeah, that's right, Alec. My story is a bit an interesting one. I lived in the UK for 17 years, so quite a long time out of the country, and then decided to take a sabbatical, come back to South Africa, and then met up with a few school friends and colleagues, and then we started looking at what is the opportunities in South Africa. And I must admit, you know, having been in the UK, fully aware of venture capital trusts, where this was actually, where it's well established, and coming here and finding that the government actually got incredible incentive, which allow people to keep money in the country, not take it all offshore, to leave some of the money here and make investments into the hospitality and tourism industry, which is, incredible opportunity for South Africa. And, I quite liked it very quickly. And now 4 years later, I'm still here in South Africa with no plans to move back to the UK, because the opportunities that I see is incredible. And 12J has really allowed us to set up a business and make those investments. So without 12J as an incentive, we would have not been able to start this business from scratch and build something up. And we are now fully invested in hospitality sector, and we continue to see opportunities.
I see you're a chartered accountant. Do you need to know a lot about numbers to be able to crunch 12J to take advantage of it?
I must tell you, it took me 6 months to understand exactly how this thing works. And I think, as investors, sometimes when we speak to them, it's not a straight thing to understand. But luckily, there's, we surround ourselves with the tax experts. I think all of the panelists here have, use some of the, the smart guys in the tax industry. We, all have business or colleagues in the likes of in the law firms that's being used that understand fully the details to make sure that we comply with the rules. I think that's one thing that we've always said, that we want to make sure we're not bending any rules or play in the gray areas, and that's worked out well for us. Yes.
Okay, well, we'll be going on to questions in just a moment, but of course, the third of our panelists, and if you could also just please, Deon, switch on your camera so we can see you. There we go. Nice to have you on the. You look a little young in that photograph. I think I must have been trawling on the wrong areas there, Deon. But what brought you to 12J?
Okay, let me just start to say that photograph is probably 5 years old. So yeah, 12J made me look like I look now. Yeah, thank you, Alec. Yeah, it was actually coincidental, to be honest. We launched a venture capital firm 5 years ago, myself and two partners, and stumbled upon 12J. In this process, did the research, found that obviously it's a massive advantage for an investor, de-risking your investment potentially with whatever your marginal tax rate is. Brought it into our methodology, and this is now the 4th year that we'll be raising capital through 12J. One of the projects that we will talk about in future sessions, we're raising capital for the 3rd time, the 3rd round, the 3rd successive tax year.
It is a phenomenal investment, and we've seen that the returns are significantly higher. I was actually talking to a guy this morning about participation mortgage bonds, which are popular, and they generate 8%. Then you got to pay tax on it, so you're probably down to 6 or 5 or whatever. If you work out on 12J, you can get significantly higher returns than that.
Yeah, absolutely. I mean, there's one particular slide that we always show investors. We do a breakdown of the key value drivers in a IRR calculation, and if you look at just 12J, that's an 8% contribution, to an IRR calculation over and above, whatever the asset gives. So it's a huge kicker.
So you're already starting with 8% in the bank, really, on an annualized basis, before you even get the benefits of the dividends in the companies. The fourth of our panelists, I'm not saying the last, but it's welcome to Jonty Sachs. Jonty, yeah, there you are. Good to see you. I see you, BCom LLB. So you come from the legal side. Are there a lot of legal hoops in 12J as well?
Well, 12J is, Section 12J of the Income Tax Act. So yeah, it's all about really understanding the legislation. So, fortunate to have a legal background. Can't say I use it much anymore. I have 2 partners who are actuaries who are really strong in the numbers. So, fortunately, I don't have to do those difficult calcs. But legal background obviously always helps. Yeah.
And what brought you to the 12J industry?
Yeah, interestingly, so as a business, we were in corporate finance, and Stefanuti Stocks, the listed construction company, approached us. They needed to raise money for a number of mines that they were looking to do work on. So we launched the JSS Empowerment Mining Fund, Jaltech Stefanuti Stocks, and we launched it at the mining Indaba, and about 6 months later, we were bought out by an asset manager, and they took over the fund, and we realized that there's an opportunity to provide administration services for 12J funds and other funds. And then we started that, and then we started our own funds, and within 4 or 5 years we raised a lot of money. We managed about 1.3 billion rand, and we administer about 2 billion rand. So we really got in at the right time at the bottom of the J curve, and it's been a really good wave for us. It's a pity it's ending in a couple of months, 2 months.
Yeah, the decision to end is not something we're going to discuss today, but it really is very surprising when you consider how little fixed investment we're seeing in South Africa, and how successful 12J has been now that it's properly structured in attracting investments to it. But entrepreneurs look at the regulations that exist as they exist and then work within them, and that's what we're going to be focusing our attention on. There you have our 4 panelists. Remembering what Stuart said, you can go onto the little question mark, type in your questions, and we will then ask those questions as we go through the next 45 minutes or so. So please try and get those questions in soon so that we can answer as many as possible. Russell starts off, and by the way, I'm not going to give away your surname, but I will refer to your first name. It keeps you kind of half anonymous. You know, it's your question, but by saying the surname, you might get somebody else who you don't really want to know that you'd ask the question. But Russell asked one. He says, do we possibly see the government seeing some sense eventually and reversing the decision on 12J? I think each of you have, Hugo, you can kick off with it, but I'd like to get inputs from all of you, please. Hugo?
Unfortunately, I can't see that. I would have hoped that they would have some, there's a lot of lobbying that's happened. All of us did our best together with the 12J organization to really try and convince them that this is something really positive and good for South Africa. And unfortunately, they made a decision not to keep it going. And the unfortunate thing is, it's now really picking up. You need time to get the money in, to make the investments, for those investments then to start working and creating the jobs. And unfortunately, if they allowed us another 4 or 5 years, they would have seen the positive impact of this 12J industry. But unfortunately, I fear that they're not going to see the light.
Well, they've made their decision, and usually with this government, being a socialist government, they're not really that well disposed towards capitalistic ideas and the longer term multiplier effects. But Jonty, might you see some change?
I don't think so. We've been really involved in workshops and discussions with Treasury. What they needed to do to deal with the issues that they've raised in the past is, I think, quite simple. Just narrow down where investments should be going, and I think we would have achieved whatever Treasury wanted to set out from the beginning. So the change or the amendment to the legislation from their side, I think, would have been quite simple. They chose not to do that. They chose just not to extend Section 12J. So I think it's really unlikely, and I haven't heard of it or seen it in the past, that they've, reintroduced the same legislation. So I doubt it, sadly.
Deon, from your side?
I'm muted. Can you hear me, Alec?
Yeah, you're back now. Good.
Okay. I have to unfortunately agree with Hugo and Jonty. I don't see it happen. If you just look at the facts and you look at how Treasury looked at this, and again, if you focus on the key issues, let's just talk about assets that they say were low risk assets. They could have very easily decided to take property out as an underlying investment and class. That would have been easy. If you look at the other change they made, I think it was 2 years ago, Jonty, where they extended the period of time for VCC to deploy the money. And one of the issues were that money weren't fast enough deployed into qualifying companies. So, what they didn't make sense in terms of the changes. And I don't see it reversing back now.
Gidon, last man.
Yeah, I look at same view, but it's been incredible in terms of keeping capital in the country. I think that's one of the huge successes of it. Certainly all of the investors that we spoke to, our investors, would have taken the majority of that capital offshore, and South Africa wouldn't have benefited from it. So from that point of view, it's been a great success. And it's also been a great catalyst, just to get new businesses going. We've started a hotel group, employed tons of people in the construction of these hotels, obviously in the running of the hotels. So it's been tremendously successful, and I guess we can only hope that something follows, and there's creativity in the thinking around incentives, and that there's learning. It certainly wasn't a perfect piece of legislation, but hopefully it's a catalyst for further incentives in the future.
Well, at least it does exist, and at least there has been 16 billion invested into that industry, which, as you say, would have gone into Apple and Amazon and probably Alphabet shares, and might have done better for in US dollar terms, but certainly in a South African context, the yields that you get from 12J and the benefit to the country is just so much better. Seamus asks, does a 12J investment also make sense for lower income earners, i.e. someone earning around 400,000 a year? It's a very good point, because from Treasury's own documentation, on the last 5 years, they said 1.8 billion rand in total tax benefits were enjoyed by taxpayers, of which 1.7 billion, so all but 100 million rand, was written back by top bracket income earners. So does it make sense lower down? Anyone want to kick off with that? Deon, give you a shot.
Sure. I think the fundamental question that has to be answered first is obviously the quality of the underlying asset, and that's always the key. So barring that it's a solid underlying asset that produces steady yields and it's de-risked, whatever you get from 12J is a bonus on top of it. You know, so absolutely it does make sense.
Jonty?
Yeah, you know, obviously, I think, you know, something for all listeners is, and Deon mentioned it earlier, there's a guaranteed, or, you know, from the tax refund, you're receiving 8% per year, but that assumes you're in the 45% bracket. So me personally, and I'll discuss me personally, I look at my tax and then I try and reduce my taxable income to around 200,000 Rand, because anything above 200,000 Rand, it starts to make sense. You're getting 25, 30, 40, 45% back on your money. So I think it works there. The problem you have is where someone is in the lower income earner, liquidity or cash is going to become an issue for them potentially. 12 years, a lock-in period of 5 years, you're not going to see your money for 5 to 7 years. So if you are a low income earner, you need to ask yourself the question: are you in a position where you're not going to be able to access that money? And if that is the situation where it's fine, well then, you know, potentially it makes sense. But the returns are significantly lower from a tax refund perspective because you're in a lower bracket. So investors would have to keep that in mind.
Hugo, as an accountant?
Yeah, no, I must agree. I think you know, we set our minimum investment at 250,000 really because of you know, some of the things that Jonty and Deon have mentioned. You know, the other deduction that's really that exists today for anyone out on the street to reduce tax is obviously your retirement annuity. You know, so a lot of people would go to that, and you know, that 350,000 is an option. Although, you know, you need to keep that for another 40 years, maybe. If you're a young person of 20, 25 years old, you have to keep it for a very long time, and you can't access it. So, you know, even in that case, a 12J can make sense. But you really have to go look at what is your overall financial position. You know, so we like to work with financial advisors that really can look at a client's portfolio. You know, because just looking at if you earn 400,000 a year is probably not enough information to make a good enough decision to make a 12J investment.
So over 1.5 million a year, it's a no-brainer. When you go lower than that, you probably got to scratch your head and just bring other variables into it. Zippo asks, and you've already told us, Hugo, your minimum's 250,000. The other three of you, could you tell us what your minimum investment? That's what he's asking. What's the minimum that you can invest on a 12J? Gidon?
1 million Rand.
1 million in yours. Okay, so that's very much in the top income area, but you are investing alongside the Novick family. Deon, what's your minimum?
Our minimum is also 1 million.
Okay, and Jonty?
Our minimum is 100,000.
Okay, so it goes from 100,000 up to a minimum of 1 million Rand, and that will give you a good insight there, Zippo. Guy, he asks, are there any steps to try and get government to replace 12J with something that is more job creating and less open to abuse by aggressive tax engineers? Nice question. Get on.
Yeah, we've been working together, quite a few of us, in terms of the initial discussions with government, firstly to try and get an extension on 12J. We weren't successful on that, clearly. But there will be ongoing dialogue. I think it's definitely worthwhile. I think as time goes on, we're going to see the success of the 12Js coming through. A lot of these are long-term projects. A lot of them are in the hospitality industry, which, as we know, has had an extremely difficult time. So hospitality, tourism will improve. So I think one must just continue engaging. It's a disappointment, but things move on, and we'll certainly be up for engaging with government, demonstrating the success over time, and exploring creative new ways of getting people investing in South Africa.
Thoughts from anyone else?
Oh, maybe I'll just add to like Gidon said earlier, right at the start. You set up a new hotel group. We're in a similar boat. We set up a complete new business from scratch, where the people were employed in building the assets, and then we employ them to run the business for us. And those people, we were able to support them throughout COVID and keep them in jobs. I mean, so the 12J itself, does work. It's like anything that exists out there. There might be people that might abuse it, but if there's a lot of people, I think, like on the call, that have been doing the right thing, and the government hopefully will see that by coming up with these incentives, hopefully it'll come up with something similar that the private sector can invest into and create jobs. David
asks the same question that we had earlier about a minimum amount to invest. $1 million sounds a lot of money, Deon and Gidon. Why did you guys pitch it there? And would you consider anybody a little who came with a bit less than that? Maybe Deon, you can start.
Yeah, there's a few things. I mean, the one is, Jonty will know more about this, is there's a requirement to be a public company and all the compliance issues around that if you drop below the 1 million. So that's one consideration. But probably the bigger one is the projects themselves. In our fund, we look at each underlying project being around about the 50 million rand level. And each year we're trying to do at least 2 of those projects. So just, the numbers, it would require a much broader marketing effort, investor marketing effort, to attract, the number of investors we'd need if they were investing smaller amounts. So we've just simplified it and gone for a much smaller niche of investors in terms of supporting the projects that we're doing.
Deon?
If I can, just add to that, and Jonty, just help me out here if I've got the terminology wrong, but effectively it's a Companies Act restriction. So what they say is an investor that's able to invest R1 million or more is classified as a sophisticated investor. And if you want to invest any less than that, the Companies Act require the company to be a public company, not necessarily listed, a public company, and that has to produce a prospectus, which is far more detailed in terms of the information that it provides versus, for example, a private placement memorandum, which is what we use in 12J if you invest over $1 million. So that's unfortunately the reason, but so it's a Company Act restriction.
You've been referred to twice, Jonty.
Yeah, the guys are spot on. It's obviously more onerous having a public company. There's audit committee requirements, but yeah, that's really it. A number of 12Js also elect to go on R1 million because they aren't in a position, and I'm not suggesting that these 2 gents are in that case, they're not in a position to process a lot of investors. So, they'd rather have 50 or 100 investors coming in R1 million. It's less admin, it's less, annoying investors to, who have lots of questions to deal with, and it just simplifies their lives. So it, makes sense on a couple of fronts.
And you're at 250, Hugo, which is an interesting level to pitch at.
Yes, so we started off as a private company, did exactly the same as Deon and Gidon, private placement memorandum. And then, when we started partnering with some of the larger firms that help distribute our product to their clients, they came and asked us that their client base would like to invest less than $1 million. For that, we then had to change to a public company, which comes with all the additional work of an audit requirements, the committee. We're in the middle of that process at the moment. And as Jonty also pointed out, the more investors you have, because you need to talk to them and keep them updated what's going on. And if you suddenly end up with, you can quickly end up at 300, 400, 500 investors of small amounts, and for that we'll need more people, and it becomes not economically viable to run a business like that. So the 250 for us does two things. One is it addresses that case we had earlier where someone says they earn 400,000, so you need to earn a certain amount of money for this investment to get the maximum benefit. And that's sort of where we decided on the number of 250.
Guy has a follow-up question. He says, would a UK SEIS, is that the way it's the abbreviation for a type approach, work in South Africa? Jonty, you want to have a go at that?
I have no idea what that is.
The UK type investment, where if you invest in their version of 12Js, they fund SMEs and there are some other requirements as well. I only know this because we had a client in England who was specializing in this area, and they were very, very successful. And I was wondering if in South Africa they could use much of what the UK has used so well.
So, in the UK, it's obviously way more matured. In fact, South Africa didn't come up with Section 12J as a concept. It's been used in the UK, Canada, and Australia. So, they really used the brain power that was successful abroad. So the UK is very developed. Investors in different tax brackets are incentivized differently to invest, and it's a mature market, larger tax base, and they can use it. So, I can't really talk the technicalities around what's worked there. What I can tell you is what's worked here. In the last 3-4 years, billions of rands of high net worth individuals and taxpayers have been invested into 12J, investing into the right or the wrong industries. We don't really understand where Treasury wanted the money to go, but it's worked really well here. Deployment has been the biggest issue, if you ask me. But I don't see how it's gone wrong in South Africa, so I can't really comment.
I'll just add a bit on that. Is that the venture capital trust work? What they did was it was very similar to like we have 12J at the beginning. Was you keep it wide open. You sort of want to get the public, make them aware of what's going on, and then what you do, you start chopping it and changing it so that it fits what you want to achieve. Now everyone knows about it, and you start changing it. And there they've got, they've reduced they've different way to calibrate what people can invest in terms of the percentage of your income, for example, and they make it very clear where they want the money to go each year. So there's a need, obviously, maybe during COVID period, I'm not sure updated on where they are, but they use it as a vehicle to get the money in from the right people and to allocate it to industries they need. I don't understand why they look more closely to what they've done at the UK and rather go that way than stop it.
Yeah, it seems like the intellect of Thabo Mbeki is no longer driving Treasury's decisions because it's a blunderbuss approach rather than a sniper approach to this. And they had something there which, as the UK shows, has been working and very successfully. So I guess a little bit of an adjustment. Noel asks, he says the Department of Finance scrapped 12J, citing various reasons. Could one repurpose to Treasury a vehicle that would achieve both their and investor objectives? Gidon, you want to pick up on that?
Yeah, I think the short answer is I wouldn't give up. I mean, I think, as I said, over time, 12J is going to show that it really has worked. It's employed people, it's kept capital in the country, it started businesses that wouldn't have been started before. South Africa needs case studies, I believe, to succeed. We need to see success, and then we'll believe in success, and then we'll be incredibly successful, even if they're small examples of success. So I just think generally we need to be creating success, showcasing success, and creating, inspiration for others to succeed. And I think that's a priority for our country, and incentives need to form a part of it, however they're structured. So let's hope that the conversation continues.
And this can't be done on a provincial level. I'm just thinking about the Western Cape, where it's a very free enterprise type of approach. We saw Amazon deciding to put its Africa head office not in Kenya or Rwanda, where all the others seem to be going, but in Cape Town because of the friendlier approach from the Western Cape government. Is there nothing that a local government could do in this field or in this incentive field?
Yeah, I mean, Alec, just to say that in the Western Cape, obviously Westgrow are that organisation that facilitates, economic activity, a focus on the tourism space, getting international flights into Cape Town specifically. They've been incredibly successful. So I think there is an argument for a local focus as well.
But I guess local taxes, it's not really in that realm at this point. Interesting question to debate at some point. We've got lots of questions for you. Derek says the tax incentives are clearly attractive for someone to invest in a 12J business. What are the downsides or risks, if any, besides normal business risks? Deon, do you want to pick up on that?
Sure. I think what most investors or uneducated investors or investors that have not invested into 12Js potentially miss in terms of a risk analysis is the risk in the 12J fund itself, not the underlying asset. There's all sorts of rules that the fund has to balance over a certain period of time in terms of number of investors, in terms of number of investments. And if those rules are not, if those rules are broken within a certain period of time, the fund is potentially at risk. So I think that's one big element that investors need to make sure of when they engage in any 12J VCC.
Jonty?
Yeah, I think obviously the underlying investment risk, and there are 12Js that offer exposure to all types of risk profiles. But I think what investors need to know is what the legislation has is limitations. So you have to be in for a minimum period of 5 years. If you exit early, you pay back the entire tax benefit, not pro rata based on how long you're in for. And that not only includes if you exit because of personal circumstances. It means if you pass away during the investment term, or if you financially immigrate, there's a recoupment. And then secondly, I think many people misunderstand what I'm about to say is capital gains tax at the end is calculated at a zero base cost. So to try and make this as simple as possible, if you invest 100 Rand and you only get your 100 Rand back after 5 years, you pay capital gains tax on 100 Rand. And when people hear this, they think, oh no, this is terrible. My tax benefits eroded, but it's not, because investing 100 Rand.
Oh, we just lost him for a moment, I hope. Hugo, do you want to pick up from there?
If you're in the highest bracket, you're paying 18 Rand to Sars after the investment term, but you receive 45 Rand up front. So the tax arbitrage if you get your money back. So, a lot of investors misunderstand that. Not necessarily a risk in 12J, but it's something that investors should be really mindful of.
Thanks, Jonty. Hugo?
Yeah, I would agree. I think people, a problem that I see, literally last week of February, everyone rushes and suddenly want to make a 12J investment. Don't really do a bit of homework on who's the team that's going to be managing your money. Have they got an experience in managing money and looking after your money and proper compliance processes in place? It's unfortunately people just rush into this last minute, whereas I think probably a good thing about this June year end is like, people are now doing their research because it's the final time they can actually make this investment, and it's not that February year end that's coming up. So if people just would take a bit more time to do proper due diligence and research, speak to their financial advisors to make sure it fits into the portfolio. I think that is a big risk that you're giving your money to someone to manage. Make sure you do research on the people and the teams that's involved, and if you can, go visit the assets. Go and not just last minute try and make a tax saving.
There's a question from Maria who says, how do we find 12J investment opportunities? Well, here at BizNews, we are going to be focusing on them, on the 5 opportunities that these 4 gentlemen, Deon's got 2 opportunities, so that they are offering, and we've gone through them. We're comfortable with their offerings, and I suppose in a way we're endorsing them by saying that here they are, we're exposing them to the BizNews community. So that gives you a very good starting point from which to make your decisions. Just on the risk side, Gidon, as a family, you've put a lot of money into these 12Js. What did you assess as the risks, as the greatest risks?
Yeah, I think liquidity is one that people certainly always often underestimated the risk of liquidity. You know, these are minimum 5-year investments. We're in the most of our funds are in the hotel business. It's a down cycle in the hotel business. You don't want to be selling hotels right now, so it's going to be longer. So I think people just need to get their heads around that. Obviously, the underlying assets got to be strong. The team's got to be strong. But just really get your head around the fact that you're in for a while. You know, dividends probably aren't going to be guaranteed, so you may or may not be getting money out in the interim. And then also just being very clear around the exit. How am I going to get out of this thing eventually? When and how am I going to exit? And that's the one that that I think has been quite vague in the past. And investors are becoming a lot more savvy around saying, here's my money. I want it back in 5 years, and explain to me exactly how you're going to get it back to me.
Jonty, here's one that I'm sure you could apply your mind to. It's from Miranda, and she said, would it work if you combined the investment from 2 individuals earning 500,000 per annum then? So in other words, the 250 and the 250, sorry, the 500 each, which would take you to $1 million, which would then give you a benefit. I presume you can't do that. It's individual taxpayers.
Yeah, well, I think you know, in Gidon and Deon's funds, what they will definitely do, I think, is they can have 2 investors in this example of 500,000 Rand each coming in as a partner and investing into their funds. So that's an option for them. So those investors can club together in a partnership and invest into a 12J. But ultimately, the tax benefit is in their individual capacity. So if their taxable income is 500,000 Rand and they invest 100,000 Rand together, so 50-50 each, they're only going to get a tax benefit of 50,000 Rand in their personal capacity, as opposed to 100,000 Rand. I think, yeah, I hope it answers the question.
It does indeed. Kevin's question is, have any of you thought about partnering with government in looking at public-private partnerships? In so doing, strengthening government SOEs and creating possible work. Deon?
To be honest, we have not. But I think I want to add on to the previous question, which will probably answer this one, and Gidon alluded to it earlier. But what we would love to do and be in a position to do is to, you know, probably through the 12J Association, you know, continue talking to government, because I mean, we understand how it works. We understand how the investors look at it. We understand the pitfalls. We understand how the money should be deployed. And I think if we could continue to make the case with government, I'm sure that we will come up with something that is more effective, probably in a totally different format than 12J. And there's many examples and case studies out there in other countries that Jonty referred to. So I think the short answer is yes. I mean, we would like to engage government on this.
Do your 12J investments offer financing options until the money is refunded by Sars? Good question from Richard. Anyone want to pick up on this?
Yeah, I'm happy to. Ours do. So we do have a really good funding option for investors at a really, really low interest rate. Obviously, the client must be able to afford to take out the funding. And our current position is we can fund, you know, up to 95% of the investor's investment. And when they receive their refund in October next year, they can then use the refund to pay off the loan. So, you know, what we saw is that there will be a lot of interest in, or we think there'll be a lot of interest in June, but taxpayers simply won't have the capital. Because normally executives who invest into 12J, they accumulate capital throughout the year and then they invest in January, February. They're going to know their tax position in June, but they're not going to have the capital. So as a business, we raised a significant fund, and we can offer investors currently 95% funding on their Section 12J investment.
That is possible, and it's innovative. You nodding your head, Gidon?
Yeah, we do it not to as great an extent, but particularly this year with the timing mismatch. It's we think it's quite important to be able to help taxpayers up until the end of the tax year in our case.
Hugo?
Yeah, I also agree. We don't do it ourselves, but you know, we are partnering with the likes of some of the big banks that actually distribute our product, and they are all very open to discussions with their underlying clients because they understand their credit risk profile to be able to, you know, they know what those people are going to earn for the rest of the year up until February when their tax year end, because you know they're clients of theirs for many years. And they're very open to discuss with their clients of financing against assets or refinancing against a future cash flow that they know is going to happen. You know, so we're also talking to our clients, existing clients, potential clients on ways to help them, but we do not finance it ourselves.
Deon?
Yes, we actually have 3 financing options available. The first one is a bridge loan. So it means that 55% of the investment has to be paid in cash. We then bridge 45% or whatever the amount is, depending on the tax refund, until next year, August. So a maximum of 14 months, depending if it's a provisional payer or a PAYE payer. It could be anything from 3 months to 14 months at a very good interest rate. The second one is also a 95% installment loan. So 5% cash down, monthly installments over a 5-year period. And interestingly enough, that monthly installment, we actually do it the same as a bond, a 20-year bond. So on R1 million, for example, your monthly installment would be 9,500 Rand. We then take the tax break, we offset it against the loan as a balloon payment, and then, you know, effectively after 14 months, you have repaid about 50% of your loan. And then the third one, which is a product we've launched a few months ago, is called Global Hedge 1, where we help an investor to either offshore his capital, or he can use capital already offshore, invest it into one of Sanlam Private Wealth's USD funds that qualify as collateral for a South African Rand loan to then be used to invest into the 12J. So it gives you basically 2 investments, you know, while only using R1 million in capital.
Very creative, very innovative, and I'm sure that as we get closer to the June the 30th deadline, there are going to be lots of people looking at those complexities. And of course, we'll be talking about all these individual schemes with the BizNews community in the next 8 weeks, as it were. But it's interesting to see that it's progressed beyond, well, make an investment and then write it back against tax to you can actually gear up this investment. We're coming to the end of our program. We've got quite a few questions and only 10 minutes to go. Here's one from Faisal. He says, all these 12Js seem like normal businesses and not too high risk, not innovative, etc. Is Treasury's analysis then correct? Could your businesses have stood on their own without 12J? Gidon?
No, we certainly wouldn't have built buildings over the last 4 or 5 years without the 12J capital. There is bank funding that one can motivate, but you know that comes with personal sureties and all sorts of requirements and very onerous obligations. So most definitely not. We wouldn't have been building hotels over the last 5 years.
Hugo?
Yeah, no, exactly. I mean, like I said earlier, I came on a sabbatical to South Africa, and if it wasn't for 12J, I might not have even been in South Africa. It certainly was the kickstart for us of building the business we've built, and you know, this business we can now scale and potentially, like they are saying, these are now quality businesses that we potentially can now get even offshore. You know, we have investors interested from the UK that's keen to invest in this business, but this business was created by a 12J injection in the start. So, you know, without 12J, we would not be sitting here.
So it's seed capital in many ways in both of the businesses that you have, which would not have been risked without the incentive. Hugo?
100% correct. 100% correct.
Jonty, your thoughts?
Alec, apologies. I've got load shed for a second there, so I lost connection. So I'm out of the frame in terms of what the question was.
Okay, it's the same question that we had a moment ago. Faisal wanted to know that if he says all these 12J businesses seem like normal businesses, not too high risk and not innovative, etc. Is Treasury's analysis then correct? Could your businesses have stood on their own without 12J?
Well, you know, when I read Treasury's comments, I was quite annoyed, to be honest, because having engaged Treasury a number of times in workshops, in person, not once was there discussion ever. Guys, why are you investing into businesses that are in hospitality, in property, in asset-backed, etc.? You should be investing into startup businesses. That's never been the discussion. In fact, the legislation is very clear. You can invest into hotels, and I can understand why. You know, job creation in hotels is way bigger, way quicker than any startup business. So, if there was guidance from Treasury, you know, I would sit here and say, yeah, you know what, we took advantage. There was zero guidance from Treasury. I think businesses that have been invested into, you know, in some cases, potentially funding would have been available, potentially not. You know, it's impossible to say. I think, you know, people having an issue with hospitality, I think that for me is absolutely ridiculous, because if you look at the hospitality sector now, has it ever needed more capital from investors than ever before? And, you know, thankfully, there's a lot of money sitting in Section 12J funds that can be invested into hotels. So, you know, I don't really agree with Treasury's view. That view was never aired with anyone in the industry, and it's, you know, it's really unfortunate that that's their concern. As far as I'm aware, every Section 12J fund is invested into investments which is compliant. They're allowed to. The legislation only says where we can't invest in, doesn't say where we have to invest in. So I don't really agree with Treasury's view, as arrogant
Deon?
as that is.
Yeah, if we just go back to exactly the question asked, one needs to, let's just take hospitality out for a moment, because it is a low risk investment backed by a property asset. But if you look at pure venture capital and the fundamentals, you know, the capital that goes in from a 12J perspective is, as you pointed out, Alec, it's effectively seed capital. It is the highest risk cycle in a startup. So most of these businesses are still very, very high risk. And if it was not for 12J, majority of this money would never have been raised for these businesses. There's a very small pocket of investors that understand VC, that are prepared to take those risks. But here's the key: most of those individuals that are prepared to take those risks into startup businesses actually want to be involved in those businesses to manage their risk. So there's the difference.
Good point. Good points all. Okay, we're getting 5 minutes to go. 3 questions I'd like to get to, if you don't mind. So we go quite quickly. I'll ask Gidon to handle the first one. From a very unsophisticated financial investor, please explain, if the 12J option is not going to be available after June, how do these 12J companies continue to be profitable companies thereafter?
Well, they've raised their capital, so the cutoff is for new capital. So all capital that's in the business, in the venture capital company, and that flows through to the qualifying companies, will be deployed and hopefully will earn healthy returns. So it's really just a matter of no new capital coming in post the 30th of June.
Hugo, can a 12J investment offset a capital gains tax liability in the year made? In other words, can it be written back against CGT, not just income tax?
Yes. Yep. It's exactly the same. This is a short answer. The answer is yes.
So if you've made a fortune on Naspers shares and had the foresight to, oh no, that's outside this tax year. What could we say? If you'd made a fortune on Purple Capital shares and you bought them at 30 cents and then sold them the other day at R1.35, you could, by investing in 12J, write that back against your capital gains tax liability.
Your answer is yes, but you would always remember you will pay that capital gain tax at some point in the future. I mean, so you definitely can take a deduction today, for sure.
Thanks, Ryan. I'm sure you're interested or keen to have heard that answer. Maria says, can a trust invest into 12J companies? Jonty?
Yeah, absolutely. So individuals, companies, and trusts can invest. What we've seen is, you know, we were fortunate to have an investor who has a trust, and the trust had a huge capital gain event. So what happened was the trust invested the maximum of 2.5 million per year, and then made a distribution to its beneficiaries. There were 4 beneficiaries. They then received the gain, and they invested 2.5 million rand. So they were able to then offset further tax. But just to add to Hugo's answer earlier is, so in the case of capital gains tax, to offset it, what happens is if you have a capital gains tax event, let's say I have a gain of 100 rand, 40% of my gain falls into my taxable income, and I'll be paying tax on my taxable income. When you invest in a Section 12J fund, your taxable income is reduced, and that's why you are able to reduce your capital gains tax liability, because ultimately it filters down into your taxable income and you can reduce it significantly. And the biggest investors that we've experienced in 12J are investors who've sold the business, sold the property, sold the share portfolio. They've got a big CGT event and they don't want to pay any tax, or as little as possible.
You mentioned companies. So companies can also offset their tax by investing in a 12J?
Yeah, so companies can to a maximum of 5 million rand. So that's quite a significant distinction. So individuals and trusts, annually they can invest 2.5 million. A company can invest 5 million rand, which is what obviously significantly more. So yes.
And the final question for you, Deon, is there a time period for the fund to invest the capital? And this is from David.
Yes, there is. So that's what I referred to earlier, where initially it was 3 years, or 2 years ago it was 3 years. I've now extended that to 4 years. So the VCC has got 4 years to deploy the capital.
Gents, it's been a pleasure, and we've come to the end of our hour in double quick time. I'm sure that the business community are delighted with the responses that you've given in this reintroduction for many to the 12J funds. We will be talking to you individually over the next 8 weeks to expose your individual options. So by the end of June, or hopefully long before the end of June, our community members will have a very good understanding through us by what they could, or how they could be benefiting from this incentive, which is going to be departing, as we heard earlier, in the very, very near future. 30th of June it is. Thanks again for being with us here on a BizNews webinar. Until the next time, cheerio. Thank you for joining us for this webinar, which is compiled and produced by the team at biznews.com. A recording of this webinar will be available later today on the biznews.com channel on YouTube. From our team, until the next time, cheerio.